Hi, good afternoon. Welcome to the marketplace. My name is Darryl Kwao. Coming up, President Mahama reviews the Ghana National Petroleum Corporation and its exploration subsidiary Exploco advancing plans to drill 2 new exploration wells by the end of the third quarter of 2026.
Oil company GNPC, together with Shell and other partners, are renegotiating the liquefied natural gas sale and purchase agreement to ensure that imported LNG can be delivered into Ghana within the next 18 months.
We've got more from the Africa Oil Week. Also, oil marketing companies set to increase the prices of petroleum products significantly starting today. Plus, the Ghana Hotels Association reacts to proposed utility tariff hikes. President Dr. Edward Akanyamika Jr. will join us for the exchange. My name is Darryl Kwao. Thanks for being with us. Details coming up. Thanks for staying with us, everyone. President Mahama has disclosed that the Ghana National Petroleum Corporation, GNPC, and its exploration arm, Exploco, are making progress towards drilling 2 new exploration wells before the close of the third quarter of 2026. Delivering an address at the Africa Oil Week in Accra, he emphasized his government's readiness to collaborate with both current and potential investors to boost exploration activities offshore and onshore.
Oil company GNPC, together with Shell and other partners, are renegotiating the liquefied natural gas sale and purchase agreement to ensure that imported LNG can be delivered into Ghana within the next 18 months. This will end our reliance on expensive liquid fuels as backup for domestic gas, thereby strengthening energy security and lowering our energy costs. At the same time, the government is implementing an accelerated plan for developing its gas infrastructure. This includes investment in pipelines, new processing plants, and storage systems to guarantee sustainable evacuation of gas from our production fields to the market. These initiatives will open up significant opportunities for private investment and strategic partnerships. In the downstream, Ghana's vision is to transform into a regional petroleum hub, and our primary focus is to ensure that we anchor our energy reliability and security through a gas-to-power policy, which seeks to ensure that natural gas becomes the primary source of fuel for our thermal plants. We're also pursuing policies to develop the country's petrochemical, petroleum mooring systems, and pipeline facilities, in addition to oil and gas refineries. These downstream initiatives are designed not only to enhance our value addition, but also to position Ghana as a hub for petroleum and energy-based industrialization in West Africa. Distinguished ladies and gentlemen, let me be quick to state that we're equally conscious that the future of energy lies in a balanced transition. Ghana is committed to pursuing oil and gas development alongside renewable energy investments, ensuring that no citizen is left behind in the global shift towards cleaner energy technologies.
Mahama opening the Africa Oil Week conference. Meanwhile, the president has signed a $1.5 billion deal between the government of Ghana, ENI, and Vitol. Key proposals include expanding production capacity at the OCTP project and developing the Eban Akuma field, expected to become a major new energy source. The partners have also committed to expanding social investment programs, building on over $10 million already spent on education, clean water, health, and local enterprise support. ENI, which has operated in Ghana since 2009, says the OCTP project has so far produced over 107 million barrels of oil and 480 billion cubic feet of gas, meeting around 70% of the country's gas needs for power generation. And still on energy matters, oil marketing companies are set to increase the prices of petroleum products significantly starting today. More in the following report.
Increase, according to the Chamber of Oil Marketing Companies, was influenced by the depreciation of the cedi against the dollar over the past month. The development has resulted in major importers paying more for the same volume of finished petroleum products brought in. This has forced these companies to pass on the cost to consumers. The data showed petrol could be increased by almost 6% per litre. This, on the other hand, could be up by as much as 4.32% per litre. The Chamber of Oil Marketing Companies in the report actually revealed if it had not been the cedi's recent depreciation, then consumers would have actually witnessed some reduction in prices at the pumps this week. This is because prices of crude oil and finished petroleum products have been declining on the world market since last month, a move that should have resulted in the prices going down at the pumps. Some of the oil marketing companies have argued we may have to brace ourselves for more hikes in the coming month if the cedi does not stabilize firmly against the US dollar. There are currently more than 200 oil marketing companies in the country. While some may move quickly to adjust price today, others may want to monitor development on the market before they also react.
Meanwhile, the Chamber of Petroleum Consumers is urging oil marketing companies to absorb part of the anticipated price increase. Executive Secretary Duncan Amwa says the move is necessary to cushion consumers. He joins me on Zoom. Good afternoon to you. So what's the basis for the call for OMCs to absorb part of the costs, and how realistic is it under the current market conditions?
Let me say good afternoon to you and to your viewers, Darrell. You would agree with me that in times when fuel prices have had to go down, you've seen some OMCs, as it were, decline to reduce their pump prices on day 1, day 2, day 3. Sometimes they will wait for as many as 4 or 5 days to reduce these prices. The argument has almost always been that they had some stock that they needed to phase out. So if you get a window as this that has prices likely to inch upwards due to the city's depreciation or poor form of run, we can only urge that they are not in a hurry to, as it were, go and pass everything on to the consumer. The cost of fuel would indirectly or directly affect literally everything, and I have already had to have some engagements with even the transport operators who are already demanding for some increases in transport fares. And so if the OMCs could be magnanimous and then stagger or go slowly on these expected increases, we would be happier for that. Although, as I speak with you, we have not recorded anybody so far inching up. It will be very good news if by close of business tomorrow, we still are at the levels that we are. Maybe they can hold on. The cedi has already started showing signs of some robustness or some appreciation the past 2 days. So maybe they can hold on a little bit and see how far the cedi fares up to the end of the week, Darrell.
Well, that's some moral situation there. But as we talk about the city's performance, it fluctuates. We are not really sure whether it is going to hang of the decline or not. And so how do we tackle this issue with the city or help fix the situation locally? Because we can't tell how the city is going to fare in the coming days because it continues to fluctuate.
Darrell, I have heard the governor of Bank of Ghana clearly, and he is quite optimistic that the cedi would bounce back to some relative stability. If that should happen, it will bode well for the oil importation markets. That is why at the start I concede that indeed the numbers are pointing upwards. But in order that the OMCs are not excited and in a hurry or frenzy to simply pass on, maybe they could wait a little bit, a few days, and see if the city indeed does give them some respite, so that whatever losses that they may have incurred the first 2-3 days, if the city is able to perform as the BOG governor is indicating, they may be able to make up for it and give us some stability. Even if it was supposed to go up, the numbers that we have recorded, we think that the market should respond a bit slower than the numbers that have already been put out there. Maybe 1%, 2%, 3%, something that we could all live with. And so we are just appealing that they are not in a hurry to simply go pass on everything the first day of the start of the window. Maybe something will change. It's just a plea, as like you rightly put it, moral suasion. The numbers are clearly pointing upwards, but if the market can hold for close of day, close of tomorrow, maybe by close of week, if the city has done something good, maybe they can still go up, but by relatively fewer points than the 5, 6, 7, and even 8 percentage points that we have seen for LPG and diesel, as far as this market window is concerned.
Well, there are some who have said that when the city was doing so well, the OMCs were not keen to reduce prices. Quick one, I don't know if you still think that a review of taxes and levies is still feasible at this time and could help manage the situation.
Darrell, I agree with those who hold the view that when we went down, the city went to about 10, 10.4, 10.5. The market didn't go that low as far as the $1, 1 liter unspoken rule is concerned. So maybe they could also hold a bit for this window. That's what we've been saying all along. Again, as to whether we'll be in for a bad run in the coming days, I wouldn't have the answers yet, but I think that as a country, there's the need for planning. You cannot continue to have a situation where strategic fuel or strategic reserves continues to be 0 liters as of this day. Something ought to be planned so that even when you wake up to international market pressures or the cedi depreciating further, government could step in at some point and say, look, I have enough in stock already. You may not need to pass on these adjustments to the public. The public transport operators, clearly, if you don't do anything about these upward adjustments, you are simply inviting them to, like you rightly put it, also increase their fares. And at that point, I don't think that it will be fair on any of us to call them to stay their prices, because their cost of operations would simply have been impacted by these increases that we are probably witnessing at this point, Darrell.
Right. Thank you so much, Duncan Amwa, Chief Executive Secretary, Chamber of Petroleum Consumers Ghana. I appreciate your time on the marketplace. Don't go anywhere. When we come back, we've got the exchange. We're engaging the Ghana Hotels Association concerned about the proposed utility tariff hikes. Stay with us. Hello, welcome back to the marketplace and for the exchange. More business groups are reacting to the proposed utility tariff hikes. I'm joined by President of the Ghana Hotels Association, Dr. Edward Akanyamika Jr. for a quick chat. Good afternoon to you. So the utility companies are proposing potentially doubling the tariffs, and how is that going to affect operational costs and overall profitability of hotels in the country?
Thank you very much, Darrell. And let me put on record that the PURC has invited us for a stakeholder engagement tomorrow.
Wow.
To discuss the proposed tariff hikes. So for now, we are trying to wrap our heads around this humongous tariff hikes.
What are your arguments going into that meeting?
A number of them. A number of them. First of all, we believe, as an association, we believe that there's some unfairness in this hikes, especially to do with water when the excuse or reason is given related to galamsey. We believe that we have a social contract with government to protect our environment, to protect our water bodies. So if that is not being done, and the cost of that is going to be pushed to the consumers, it is very unfair. And for me, that's the beginning point of our argument. Now, secondly, we believe that the PURC instituted a quarterly review of the utility tariffs. What has changed? We've not been given any reason. This is a multi-year tariff adjustment from 2025 to 2029. What is informing that? I hope we'll get some answers tomorrow, because once you look at that long stretch, then you'll be able to find reason to give these huge tariff hikes that you're talking about. And when it comes to the exchange rate too, I think that there's been some slight stability, of course, apart from the past few weeks increase that we are seeing. So if that could also be checked, then what would be the basis for these huge hikes that we're talking about?
The way I see it, the utility companies are in a crisis situation. That's why they are asking for the rates to go up. And, well, we could also say you guys are struggling. And so what's the reasonable way going forward? Do you agree they should at least get some upward adjustments so they can also survive and supply you the services you need to also make your businesses run?
There, we have always made the point that we would prefer stable utility supplies or services, okay, to the situation where we will have to have that unstable utility supply. So if there's a need for some adjustments in the tariffs to ensure that we are very fine with that, but not to the level that they are proposing. I mean, these are proposals that can easily send business people to their graves. So not at this level. We want that which will be conducive for business. And we think that there are several elements in the build-up, the cost build-up, which are not necessarily the cost of consumers, and that have to be checked. So we allocate the cost to the right authorities.
We've got barely a minute. I mean, you sent me a tall list of other charges aside from utilities that you have to deal with. And so if you have to speak to the government, what should they do? How can they intervene and help the hospitality industry?
Yes, government will, and I'm glad you made reference to that tall list of statutory payments that we do. Government will have to take a holistic look at these things, because you see, it's very easy to pick just one item of the cost and then project it as, oh, we need tariff adjustment. But when you look at the whole picture, then you begin to appreciate the challenges that businesses are going through. And that will, for me, speak to their conscience and know how to go about some of these adjustments.
All right. Wishing you all the best going into that meeting tomorrow with the PURC. I'm sure we'll come back to you for a debrief on how it all went. Thank you so much. Good to see you, Dr. Edward Akanyamike Jr. He is president of the Ghana Hotels Association. And that's the marketplace. More news on our website, myjoyonline.com/business. CD to record mode stability this week. $1 going for 13 cedi 60 pesos. myjoyonline.com/business. All right, my name is Darryl Kwao. Thanks for watching. We will be back same time tomorrow.